This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Morning, everybody. It's Friday, February 27th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 5 at 438 1/4. March soybeans were up 4 3/4 at 1152 1/2, and March Chicago wheat was up 16 1/4 at 588. This morning we had an export sales announcement: 257,000 metric tons of corn to unknown destinations, and that was for 25. Also, we had a main inflation indicator out here this morning. PPI came back surprisingly higher, up 0.8% versus the street was estimating a number closer to 0.3%. And then all items for PPI rose 0.5%, again higher than expected of 0.3%. The Dow currently down 526. So outside equity markets having a rough start to the morning here. Good morning, fellas. We've got last trading day of the month. First notice day is kind of here and gone, I suppose. And crop insurance is going to be set here this afternoon. We've got corn right now averaging 461. That was unchanged from the previous day. And soybeans are averaging 1108. So that was up another penny from the previous day's settlement there. So we'll see where we get those numbers here on Monday, and then it's time to get your policy lined up and selected and grind into the end of the month for planning intentions. So I guess, Dustin, maybe share a few thoughts here this morning, and we'll throw it around the room.
Yeah, thanks, Dan. Yeah, it's key time of year. Feb first notice day was it's kind of a concern, right? There tends to be a lot of action and movement on the selling side in the cash market. They can often drag the price down. We saw a little bit of that in the spreads, like March to May got to 14 under early in the week. But largely it's been kind of a benign, almost a friendly first notice day window. I think that you get past that period of time and you think, what's next, right? Is what's on the horizon to get people moving. We do have strong demand. I still think we have an excess old crop supply. So I think the spreads are still suggesting that. We've still got carries from old crop to new crop. I think those carries could be wider than they are today before the end. Much like last year. I mean, last year it was a much stronger market this time of year, and markets were inverted, right? We had right around this time, we were coming off of $5 corn for old crop contracts. So much different environment, but much larger supply. And I think that still gets reconciled in the end. So something to kind of keep in mind. But hopefully in the meantime, this push is going to give us some opportunities to lock in profitability for the new crop. I would be mindful of that overhang of what the balance sheet is suggesting to us. Now, we could be surprised. We may find that, we have South American weather issues in Brazil for their second season crop coming up. We could find, our own crop is not as big as we expect this summer because of weather. And there's a lot of concerns about dryness right now in parts of the eastern belt. So like I said, cautiously optimistic. I do feel a lot more comfortable about risk right now that the insurance prices are 99% set. They'll be set, we'll know those numbers. We know we've got a much stronger farm bill. Don't want to be a broken record. So when people ask, well, as we're hitting new highs in corn and beans, like where do I sell? It doesn't mean we shouldn't sell. We shouldn't hedge. It's just how hard do we hit that gas if we measure all those other things? Typically, when you just look at a seasonal of corn and beans, like the opportunities to sell are often best in that May to June timeframe for new crop pricing. That it doesn't have to be that way, right? It could be the complete opposite that way, like COVID was. But through a 20-year history, that's often a case that's a good time to be considering it. And I look at that as like, if we have all these plan B type protections in place, strong insurance, some marketing to date, how much time does that buy us, right? Because if we want to try to get to be really efficient marketers and profitable marketers, I think it's more of a timing thing than anything. We're having these same discussions in May, June at these same prices. It's probably a different story with our client base than it is today. So 5-6% higher than here in both products into that time frame. I'm probably a much more willing and aggressive hedger for the year if we can pencil profitability for the grower.
That's good stuff. It just feels like March is going to be it's going to be a wild ride. Between planning intentions, they're tabbing the end of the month, end of March, to get the EPA and the SRE program squared away. I mean, we saw a pretty volatile soybean market yesterday just based on news headlines coming out. And so, Ben, I think maybe a few thoughts there just on, the renewable standards and everything that could be coming down the line. I mean, I think it just highlights the need to understand risk and be ready and willing and able to make adjustments as we go through March, because it could be a pretty wild ride.
Yeah, an old adage from a guy that I traded with for many years is he was a firm believer that, you mentioned volatility, that above the 200-day you wanted to be long vol and below it you wanted to be short it. It's kind of one of his rules. And quite frankly, it was fairly accurate. If you look at this morning, you're really good. The charts look good in beans above the 200-day, striking up against some recent highs. Corn is kind of at its first real test at the 200-day, which is 448 in the May. And wheat is been on a great ride. Now that's a market that you kind of have to take a little bit of a measured approach to, because the short has been a lot bigger than the market really should have because of wide spreads, which is now gone, and we're seeing them exit. So, how far can corn go in this, this time frame that Dustin mentioned? I think a lot of that depends on if corn kind of gets triggered and managed money wants to take that risk on to, say, prove a crop to us. That's your typical seasonal type of rally in that window that he's speaking of. But I definitely think corn is going to be the laggard through all of this unless we see continued problems or an escalation of problems with the safrinha crop, delayed planting, etc. And we see continued purchases from unknown. It was a small one this morning, but that's out there. And I think you have to have a kind of an open mind, and can't reiterate enough that I think you have to treat no beans differently than July beans, and you have to treat new crop corn different from old crop corn. So, to Dustin's points, there's room for spreads to widen. It's kind of atypical, but you could see it widen just from the back end rising. So looking forward to seeing what the test of corn looks like this morning. 48 50-day moving average. 53 is the point of control on the profile. That would match up with all of corn that changed hands between 46 and 48 before we broke. So hopefully there's a willingness to take on some length, but I think there's a lot of headwinds for a heavy buyer in corn.
Yeah, Jace, put a bow on the greens for us this week. I know we've been doing a lot of crop insurance analysis and visiting with folks, and we're basically home on our price, and guys are ready to lock stuff in and do some things. But it's just exciting to see that there's opportunity now this year to get pretty dynamic, from a crop insurance perspective. So what are your thoughts?
Yeah, no, I agree. And I think Dustin said this before, right? Like a lot of that big chunk of risk is behind us for new crop. And we did have a decent rally in new crop for corn and beans, right? So we get to set that higher price. Volatility remained relatively low. And with these subsidies, you get a ton of coverage for really cheap. So yeah, it's exciting to have those safety nets that we can kind of lean against. And target, a plan A strategy that we kind of preach, having that robust plan B subsidized by the government, and not only farm bill, but also crop insurance. Fundamentally, corn acted great during first notice day. I agree with Dustin, so I'd love to see some follow through, and it wouldn't surprise me that the bushels that were forced to be sold or rolled is behind us. And as we get into spring, and if demand stays good, which I imagine it will be for a while, I think there's some better selling opportunities. It's wishful thinking on some part, but everything that we've seen over the last couple weeks would suggest that, in my opinion. So I mean, corn spreads got wide but popped really hard. I mean, March is up 5, right? That was the contract that was beat up for the roll, and it popped pretty good. Deliveries were low. Bean spreads are wider, right? Like March, May spreads are wide. So like this bean story is interesting. Old crop, new crop. I don't know, what to think about it. Sitting at 1170 May beans, 1180 July. I mean, we're getting right up to that $12 mark in old crop beans, without a whole lot of news on if this premium in old crop is justified, in my opinion. So, but it's I mean, any bear has been getting beat up, right? I mean, the money flow sometimes in the story, outpowers maybe the bigger picture fundamentals, at least on the world stage, in beans. So I don't know. I'm staying away from beans for the most part. I'm glad to see it. It's just shaking things up, right? We got November beans at 1130. That's awesome. I think you got to take advantage of that from a farmer. It's helping new crop corn. Wheat's helping both, right? It is getting a little exciting. Soybean oil is getting a little exciting. So some of these things line up, in the right way or wrong way, depending on how you want to look at it. And I think Justin's mentioned this fast, like the new crop corn story could be really, really interesting. We've built this demand through low prices over the last couple of years, and that's hard to change, right? And I was kind of taught this from a young age, that when you build up really good demand, it's really hard to shut it off. And it takes price to do that, and sometimes probably price going higher than it needs to. So if you do get in, we're kind of talking about this drought. It's too early to get really bullish on a drought, in my opinion, big droughts do seem to happen, now, right? Like they start, like in hindsight, you look back in like 2012, I mean, that was a drought that started in 2011, so I'm not calling for it by any means, but a couple of these things line up with how bearish the market's been. I mean, we could have some really volatile markets. So again, kind of wishful thinking stuff, but from what I'm seeing right now, it's all positive.
Yeah, and you look, I mean, it's like you've quietly looked at these corn at, almost 470 here this morning, right? Yeah. And you got a 30-cent path to $5, which is certainly a psychological type of idea, which seems so far away 6 months ago.
Yeah,
right?
Well, and to Dustin's point, don't confuse old crop and new crop corn, right? I think they can be two completely different fundamentals, sure. Right? I do agree with that. There is a big supply of corn still out there. So don't get, rosy-eyed too much if you're holding on to a bunch of corn, and say, let's go, I'm diamond hands on this corn in the bin, that usually doesn't work out in the long run. I think if for me, short run, I'd be looking, into early spring. If we see some good price action, I think you still got to take advantage of that for your old crop. And then you can start working the carry and, all these other things, working the basis. I think that's how to play old crop. So.
Very good. We got a couple of minutes here. Rylan, the market, cattle market's kind of anxious, it feels like, about that possible strikeout at that Greeley plant for JBS. It's starting to get some rumblings here this morning. And overall, a pretty quiet hog session compared to where we've been for the last 7 to 10 days. So I guess put a wrap on the week for us here on the livestock markets.
Yeah, absolutely. We got the jitters yesterday. I mean, there was just a couple new announcements about follow-up with the JBS union kind of registering to strike. So it's just, this kind of slow-moving freight train, as it were. So hopefully a deal can be reached, because the market is obviously really shaky about this right now. I mean, Greeley's 5,000, 6,000 head, so I mean, like, this is a big buyer that, we don't want to leave the market right now. And overall, we saw a little bit of cash trade packers kind of taking advantage of the board here, just being lower. So we did see some 243 live sales, about $3 lower from the previous week, 383 for dress. So that's down 5 in the north. So there's still a lot more to go. It would be nice to see the market kind of catch much here, but overall, they're just, as we've been kind of noting, I mean, the headline trade is the market is very sensitive. We're at record high prices. And at this point, every time we start down, it seems like there's just a lot of panic, a lot of fear. So cooler heads typically prevail in these situations. I mean, we have seen the beef market kind of rally kind of contra-seasonally here. So I think just overall, there still are some silver linings here. But yeah, we are definitely kind of technically destroying a little bit of the friendliness of this market. We traded right down to the 50-day moving average for April, and just feels like you just have a decent chunk of fear and headline risk here for right now, and that lower cash trade isn't going to help anything at this point. So we'll see how that shapes up by the end of the week. And on the hog side of things, new highs, but still just kind of ran into a little bit of resistance. It's just been a really good run. Managed money still piling in here. Open interest was 3,600, up 3,600 contracts. So we still think most of that's going to be coming from the speculative side of the market. We did see cash take a little bit off the top here, down 21 cents yesterday, but still 91. So it's still been a really good cash move. Carcass was down a little bit, but like we said yesterday, the focus, I think, really is on the bellies on the carcass side of the market. Bellies were up $2 yesterday. So it feels like you got really good fundamentals right now. You got really strong export. You got bellies rallying, you got cash strength. So we're just kind of, it feels like we're still trading quite the seasonal optimism. Typically we can kind of drift sideways from here, but overall I think a lot of the support is moving to the back end of the market. October on back, hitting new contract highs yesterday, and multiple days up in a row. I mean, it's a great opportunity. Hopefully it just keeps going here, but overall it just feels like you could definitely run into some resistance here, but the news is awfully good on the hog side of things.
Very good, my man. Jace Kyle appreciated your Diamond Hands comment here this morning, so it didn't go unnoticed. Brian, we made it through another week, buddy. Why don't you hit us with some Fun Fact Friday today?
All right, thanks, Dan. Happy Friday, everybody. Well, today, February 27th, is National No-Brainer Day. We're a day where you shouldn't have to think so hard. For an example, when you're driving on the expressway, it's a no-brainer not to get on top of the car in front of his bumper in traffic where there's nowhere to go. Also, if you're a truck driver on a 2-lane interstate, it shouldn't take you 5 minutes to pass another truck. I'm having one of those kind of get off my lawn kind of mornings here, but here would be the perfect no-brainer day. Stay in your pajamas all day. Order pizza, obviously deep dish on the couch, right out of the box. Play the easiest games that you can think of: rock, paper, scissors, tic-tac-toe. Would you rather? Rylan, would you rather fight 100 duck-sized horses or one horse-sized duck?
Man, I think I'm going with the horse-sized duck. I think I got that one. I'll take that thing down.
I'd like to see that. But we'll continue to watch shows you've watched 100 times, i.e. like the Seinfeld or a South Park. Attempt dumb challenges, trying to lick your elbow, try to balance a spoon off your nose, and play The Floor is Lava and film it. That'd be instant comedy gold right there. And lastly, end the day with a group text with dad jokes, i.e. why did the Scarecrow win an award?
Why?
Because he was outstanding in his field.
Boy.
Yeah.
Tell us you're the oldest guy in the room with that.
I go up and Ben's up there. and lastly, I think we have an actual pick of Would You Rather with Rylan.
Oh, jeez.
You knew it.
You knew where he was going.
You guys know me too well.
Attaboy, Jack.
I take a
Look
quack
at
at
the teeth
that
on
thing.
Dude, that's terrifying. I mean, come on.
Oh, very good.
Well, that's that image will be in our minds for a while here.
Boy,
Yes.
for everybody.
Amen. Amen. Very good, Brian. Appreciate that, buddy. We just came into the open. Let's get a quick readout here. March corn up 4.5, 437 3/4. Got March beans up 4 3/4 at 11.50, 2.5, and March wheat catching a bid here this morning up 17.5 at 589 1/4. We've talked about it a couple times here this week, but I want to highlight the AgYield NextGen Foundation's first annual National Scholarship Competition. Link is in the comments section. Be sure to check that out. If you are in college, will be entering college, and want to compete on the national stage in our simulator for college scholarships, please enter. The link is in the description there. Got to be enrolled by March 27th. So let us know if you got any questions, but it's going to be a great competition. We're going to have a lot of fun with it. So check that out. Also, War Room Report, if you're looking for a deeper dive into all things markets, deeper dive into the things that we talk about on a daily basis. Premium content also available there from our team. Check out the War Room Report. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend. We'll talk to you again on Monday.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.